So at the end of this, it's going to be a silver standard, not necessarily a gold standard. Going back to gold would be better where we are now. But the real end of the inflationary system is when credit is going to collapse. When credit collapses, dollars don't work. And if dollars don't work, none of the other currencies work either, because that's what we say reserve currency, right? That's currency that's in the basement of all these other central banks. So when the dollar falls, or these other currency falls, all credit derivatives, and then you're left with all the purchasing power of all that lost purchasing power gets vacuumed into silver, even more than gold, which is why we're going to go eventually to very near a 15-to-1 ratio, which is the historic exchange ratio, monetary exchange ratio between gold and silver. That's natural economic law.
In recent commentary, Rafi Farber has highlighted what he views as a historic transformation unfolding in the silver market, one that extends far beyond the typical cycles of supply and demand. He notes that billions of dollars worth of physical silver are being pulled out of COMEX warehouses in a matter of days, a movement too significant to be dismissed as simple tariff effects or arbitrage opportunities. Instead, he suggests that this is evidence of a global revaluation of silver's role, with demand no longer concentrated in Asia or emerging markets, but now taking root in the United States as well. The implication is that silver, once sidelined in the modern financial system, is quietly regaining relevance as nations and investors search for security in tangible assets amid mounting instability in fiat currencies. Farber often connects this shift to history, reminding audiences that silver was the true backbone of global commerce for centuries, facilitating trade from the Silk Road to early modern economies. While gold has traditionally been linked with wealth and state treasuries, silver functioned as the money of the people, circulating widely among ordinary households and merchants. The transition away from silver toward gold standards, he argues, was not just a technical monetary adjustment, but a deliberate redirection of purchasing power, stripping economic agency from the broader population and consolidating it within the hands of elites. Today's fiat-based system, in his view, represents a continuation of that same pattern, where inflation and debt mechanisms erode the wealth of everyday citizens while safeguarding the interests of central authorities and financial institutions. Looking forward, he warns that the unraveling of credit markets could trigger a severe monetary reset, one that challenges the reliability of the dollar and other fiat currencies as stores of value. In such an environment, capital is likely to rush into tangible assets, with silver uniquely positioned to absorb much of that shift. This could reset the gold-to-silver ratio closer to its historical norm of 15-to-1, signaling not just a temporary price rally, but a fundamental reordering of silver's place in the financial system. Such a shift would not simply elevate prices, but could restore silver's long-diminished role as a cornerstone of global financial stability. Now, we present the clips from Rafi Farber's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
It's not that prices are rising. They only seem to rise within the inflationary system, within this illusory system that we're all stuck in, like a prisoner's dilemma, and we're all stuck in it. Prices are actually, they've been going down since 1960s. I mean, if you look at everything priced in money
and gold.
Money, I mean gold and silver, mostly gold, silver secondarily. But if you look at actual prices, they're going down. And so the prices are only going up if you insist on maintaining your economic existence within the illusion itself. And you could say, okay, fine. So let's say I want to get out of the illusion and just, take all of my salary and just buy gold with it every month. Well, I understand you can't do that because you need to be liquid, and gold is not as liquid as dollars. It would be if we were on a gold standard, but it's not. So then you could say, so then, we are losing out. But it's not just that prices have been staying stable in gold. They've been falling in almost every category. And anything priced in gold is going down. So even if your dollar salary is less, right, then the amount of gold would keep going down with however much you could put away every month. Let's say you earn like $5,000 a month, and you put, $1,000 a month away or $500 a month away in gold and silver over 20 years, and each month it's less and less gold and silver because they keep going up, but you need less and less gold and silver to even have higher standards of living. So you can live outside of this illusion. That's what I'm trying to get people to understand. It's not about stacking and then becoming rich, and then using gold and silver to accumulate dollars. We're getting out of the illusion as much as we can. It's like like a drug addict, right? If you're talking to a drug addict, you have to understand how they think, but you can't go completely into their world. But you care for them, so you need to communicate with them in a way that they think that you're on their planet. But it's a very difficult position where we are, because we have to put a leg in the illusion and we have to keep a leg out of it and keep our minds together, which is it's very difficult even for people like us. It's all the more difficult for people who don't understand intuitively with the confidence that gold is actually money, and it still is today. That was the final piece that fell into place for me. That only I think in 2022 or something like that, when I finally understood, when it finally slipped into place that everything is really based on gold and silver in this entire pyramid that we're living on. The higher we get on it, the thinner the air gets, and the more insane we become keeping one leg in it while trying to keep one leg out. But we're keeping it together. A lot of people say, and I think they're correct, that we've been talking about the pyramid, right? And gold is at the bottom. But underneath the gold is an even smaller triangle of silver in terms of value. Before gold was money, we talk about gold standard and going back to gold standard, and this is what we have to do. But really, it's not exactly that. It's really going back to silver is what we need to do, or what will be done. I understand that, trading silver coins is not economical in the sense that it's very bulky, and you can't actually exactly do that in today's world. But the human civilization started not on gold, but when we really started global trade and continents started trading, and the Silk Road, and Africa started trading with Asia, and you really got a big economic system going, it was based on silver. What happened in 1873, right, with the crime against silver, or what exactly they call it? I think it was the crime against silver. What happened was, who owned silver back then? It was the poor and the middle class. That's what they used for their money. What did rich people do? How did they store their wealth? They stored it in gold, because they had too much silver. They couldn't store it all. And so they had a lot of gold. So what's the best way, if the middle class and the poor, and there's a lot more middle class and poor than there are rich, what's the best way to take purchasing power from the middle class and the poor and give it to the rich? If you're on a silver standard, move to a gold standard, right? That's how you do it. But everything that the government does in order to keep the pyramid going is basically a theft of the middle class and the poor, for the favor of the rich. So at the end of this, it's going to be a silver standard, not necessarily a gold standard. Going back to gold would be better where we are now. But the real end of the inflationary system is when credit is going to collapse. When credit collapses, dollars don't work. And if dollars don't work, none of the other currencies work either, because that's what we say reserve currency, right? That's currency that's in the basement of all these other central banks. So when the dollar falls, or these other currency falls, all credit falls, all credit derivatives, and then you're left with all the purchasing power of all that lost purchasing power gets vacuumed into silver, even more than gold, which is why we're going to go eventually to very near a 15-to-1 ratio, which is the historic exchange ratio, monetary exchange ratio between gold and silver. That's natural economic law. We have to go through a reckoning. That's natural law. Like, just as all debts are paid either by paying the debt or defaulting, all theft is paid too. Because when you steal that value, when you make an exchange of two people and they're both benefiting, legitimate, when you steal, one loses at the expense of the other. And so you have a net negative effect on society. So when you have a society that operates through these sorts of theft systems, those thefts and those debts are going to be paid one way or another. Now, I have no dollar figure for where silver is going to go in the end game, but I do believe strongly that the end game bell, how do we know when this is all over? Like, the bell's ringing, okay, well, dollar has collapsed. It's going to be at a 15-to-1 gold to silver ratio, one that's relatively stable. I'm not saying like we hit it one day, like in 1980 it happened for a day and a half or something. I'm saying this time it's going to stay that way until we can rebuild a basic economic system again. So it could be a year or two, three, I don't know. But I'm saying it's going to be stable enough that silver supplies can filter through the economic system, physical silver supplies, and that figuratively almost literally creates a base of wider silver dispersal where you can rebuild another credit pyramid, hopefully an honest one where, all debts are paid and you don't have fractional reserve or however you think the banking system functions. Well, what does the United States look like? I really don't know, which is why, frankly, I don't want to live here. I don't know what Israel's going to look like either. I'd rather be with my people than being here. Precisely because I don't know. I would imagine that states could break off from the federal government. The federal government could dissipate, and you could have regions, different regions. Like, if the South had won the Civil War, you'd have the Confederate States and the Northern United States. So, break into a few pieces. I think there's going to be serious trouble in the very big cities like in LA, New York, Chicago, Minneapolis, where you're from. These places that are morally rotting, they're not going to do very well. But I think outside of that, you will have Americans, and America will exist. The United States as it exists now, I don't know. I can't say yes. I can't say no. It might reorganize into some looser government or Articles of Confederation-y or something. Or California, New York could cede and then leave the more fiscally responsible states into some other union. It could be anything. I just hope that we get through it with the minimal amount of suffering.
While silver has been consolidating in recent months, Rafi Farber argues this is not a sign of weakness, but a classic buildup before a sharp breakout. He emphasizes that gold often takes the lead in precious metals bull markets, setting the tone for the cycle, while silver tends to lag before making its presence felt in a much more dramatic way. Historically, this delayed reaction has worked to silver's advantage, as the metal often delivers steeper percentage gains once momentum shifts in its favor. Farber notes that this consolidation phase is part of silver's recurring rhythm, a period of quiet strength that compresses energy before it eventually bursts into an aggressive rally. As he points out, this is when silver begins to shrink the gold-to-silver ratio, signaling the point where silver overtakes gold's earlier performance explosively. Farber also highlights that the current economic backdrop is creating an environment tailor-made for silver's outperformance. With the Federal Reserve preparing to cut interest rates, markets anticipate a weaker dollar and a rush into tangible assets, which historically boosts both gold and silver. However, silver carries an added layer of momentum due to its unique industrial demand. From solar panels and electric vehicles to advanced electronics, silver is deeply tied to the technologies driving the global energy transition. On the supply side, production has struggled to keep up, leaving the market vulnerable to tight squeezes once investment demand picks up. Farber believes this combination of monetary policy shifts, industrial growth, and historical market cycles positions silver for a dramatic surge, making it one of the most compelling opportunities in today's financial landscape.
We know that communist societies collapse. That's a given. I think we can all agree on that. Eventually they do, because if everyone steals from everyone, then nobody produces anything, which is exactly what happens in hard communism, and then everything falls over, some people starve, lots of people survive, and then they rebuild. We saw that happen with the Soviet Union, we saw it happen in China, which, they're still communist in name, but they've got free market zones, to survive. But if inflation itself is theft, which it is, then it's a theft of every transaction everywhere, but it clips a little off the top of every single transaction. So it's much slower also because as you produce more, as your society becomes more productive, the theft becomes more and more subtle. But still, even if it does, eventually a society built on theft will collapse. We just don't know exactly when, but it's the same principle because all societies based on theft collapse. Right? If you have a society that has theft in it, you can survive that by creating a justice system, creating a penal system to isolate the theft and put it away. But if everybody has to operate on theft because the entire monetary system where everyone's trading money is itself based on theft, then there's no way to escape it except getting out and getting gold and silver, getting real money. If we go back again to the Great Depression, what did the academics who were trying to solve this issue, what do they think was the problem? That prices aren't high enough. So if we can get the price level back to where it was in 1929 before the crash, then the crash will end. But really, the price level is just an effect of a much deeper problem down below. Why did prices fall? Because the inflation of the money supply was too high, and then it stopped, and then all these other industries that had overinvested in themselves, they collapsed.
Doesn't that sound like where we are right now, though?
Yeah, it is. So Trump is trying to say, like, well, we've lost manufacturing. So if we can just get manufacturing back, then we'll be back where we were in the 40s and 50s when we were, a powerhouse. But it's the same pseudo logic as saying, well, in the 1930s, well, if we could just get the price level back to where it was in the 1929 before the crash, everything will be fine. I don't think bringing manufacturing back should be a goal in itself. I think that manufacturing returning to the United States is a symbol. It's an outgrowth of the monetary system becoming honest once again. What does inflation do? It centralizes things to the cheapest countries where workers have a lot fewer legislatively induced rights. There's child labor, and so things are going to go there where it's cheaper. That's just what's going to happen. I'm not against your plan, but what I would say is that, and I'll add another Torah-based story to this, that if we focus on just making money honest again, then all these things will happen. Manufacturing will return, and instead of having to legislate a universal basic income, we'll have the gold and silver supplies spreading out through an honest derivative system, and then people will become richer, slowly but surely. I mean, we're not going to stop the crash. We're not going to stop people from falling, but what we can do is get out of the way and then let the market function as it would function. So the story I can tell you, and I released this in a video recently to my Patreon subscribers, is that I came across a verse that said that the menorah, the golden menorah, this big block of gold, right? And God tells Moses how to make the menorah. So the verse says that the menorah was made. It doesn't say that Moses made the menorah. So the rabbis pick up on this statement. They're like, what do you mean the menorah was made? Didn't Moses make it? And then they say, no, actually he didn't. He didn't know how. He was trying to, and he kept failing. And so Moses says to God, like, I'm just going to put this block of gold in the fire, and you, God, you can make it into a menorah however you want, because I can't do this. It's too hard for me. So, I mean, what does that tell me? It tells me that if we just return to honest money, return to honest gold, honest silver, there's going to be consequences. People are going to fall, but it's going to be up to stackers and other people that have real assets and gold to help rebuild and find the talent, find people who can do things with our money and become the capitalists of the world. And then these problems will work themselves out. I don't think it's up to us to discover a grand system or a grand solution to all this, where and put this variable here and that variable there. And if we just like make this trampoline or this what do you call it? That the stunt people they fall on when they're falling from the sky, like a big pillow.
Yeah, I know what you mean.
Yeah, whatever it is, it might be a good idea. But I don't have the expertise to tell you that. I just know that we have to go back to honest. It's not exactly bad money drives out good. And Rothbard made this distinction. He's like, this is not a good definition. It's not bad and good. It's artificially overvalued money drives out artificially undervalued money, right? The dollar, the paper dollar or the digital dollar or the stablecoin backed dollar, whatever form the dollar is, it's worth intrinsically nothing. The gold is the good money, and it's undervalued because if it were backed 1-to-1 with every dollar, it would be something like $40,000-$50,000, and it's only valued at $3,400. So it's artificially undervalued. Once gold is valued as at par with the dollar, whatever that is, either we get there legislatively and they say, oh, we're on a gold standard now at this exchange rate. I don't think that's going to happen. Or the market forces it like it did in 1980. And what happened in 1980, the way Daniel Oliver of Myrmikan Capital puts it, is that if you look at the Fed's balance sheet, the valuation of the gold on their balance sheet more than 100% balanced all the other assets, all the debt, all the treasuries, and all the other crap they had. The amount of gold in 1980 valued at 850 backed every other liability by 100%. That functionally is a gold standard.
Throughout market history, silver has shown a recurring tendency to remain relatively subdued while gold leads the way, only to burst out with far more dramatic gains once the bull run matures. Rafi Farber often compares it to a spring held down under pressure, subdued at first, but capable of launching with extraordinary force when released. Time and again, this has proven true. In the 1970s, when silver multiplied gold's gains by 2 or 3 times, in the 2000s when it rocketed from under $5 to nearly $50, and again in 2020 when it leapt more than 140%, while gold managed around 40%. Today's climate of stubborn inflation, ballooning global debt, and eroding confidence in the dollar echoes those earlier setups, hinting that silver's quiet phase may be nearing its end. If history is any guide, the next chapter could be one of its most explosive yet, raising the question, will investors spot the signal in time or only after silver has already made its spectacular run? Share your thoughts in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.